Hello and welcome. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. Coming up on the show, IMF says Kenya's $1.5 billion standby credit in place but not accessible. Rwanda to issue mining licenses to boost investment. Plus, Congo seeks relief talks with oil traders over $2 billion debt. We start off the show with the markets, and here in Africa, the South African JSE index was up 0.18% ahead of the budget speech later in the day, and as the headline consumer inflation slowed to 4.4% year-on-year in January from 4.7% in December. The Nigerian market was up 0.09%, and Egypt was also up 0.44%. Nairobi closed in the green on Tuesday, up 0.85%. In the meantime, a flood of money from private pension funds has driven a 33% surge in Ghana's benchmark stock index this year, giving the West African country the world's best performing equities. The government in December transferred 3.1 billion cedis to the funds, money the state had held since 2012, while the industry put structures in place for new entrants. 7 months earlier, Ghana doubled the proportion of assets that pension funds can invest in stocks to 20%. As of Tuesday, the 36-member Ghana Stock Exchange Composite Index had risen more than the 95 other benchmarks tracked by Bloomberg in dollar terms since January 1, boosted by a World Bank forecast that the economy will expand by 8.3% in 2018, the fastest pace on the continent. In the Middle East, all the markets were also up at intraday. Abu Dhabi was up 0.13%, Dubai 0.47% up, Qatar was trading up 0.22%, and Saudi Arabia was also in the positive 0.04% up. And in Europe, equities were lower in early trade as investors focused on further earnings and reports and, of course, data releases. Let's talk to Conrad for more information. Good afternoon, Conrad. It's another day. How are you doing today, Conrad? Okay, Conrad, the Council of the ECB meets today in Frankfurt. How much of Latvia's central bank corruption crisis will be part of the discussions?
I gather it's going to be a great deal of the discussion, despite the fact that this meeting is not followed by a press conference. It's quite likely that we are not going to hear any details about what exactly was discussed at this ECB Council meeting. Ilmaz Rimšević, the governor of the Latvian Central Bank, who was arrested and interrogated by anti-corruption authorities in Latvia at the beginning of the week, he will not take part in this meeting, but his deputy will take part. It's a lady called Zoya Rasmussa, and she's likely to have to answer a lot of questions of her colleagues at this council meeting. And there are going to be a lot of discussions because it's quite obvious that not only the reputation of the quality of the supervision of the banking sector in Latvia is at stake here, but you know, the supranational supervisor of the banking sector here in the Eurozone is the European Central Bank. So this is a question about, you know, the efficiency, the trustworthiness of the supervision of the Central Bank, the European Central Bank itself. We still don't know whether this story about the alleged bribery of the governor of the Latvian Central Bank really is only a story about a major top official of the central bank accepting or demanding a bribe, or whether this is a scheme from sinister sides in the commercial banking sector of Latvia to harm the reputation of the central bank. The man who accuses Rimšević of having asked for a bribery is Grigory Guzelnikov. He's a Russian who lives in London, an oligarch, if you like, and who is the major shareholder of Novik Banka, a commercial bank in Latvia that has legal hassles with the government in Latvia. He is the one who said that the governor of Latvia's central bank asked for a bribe. But of course, being a Russian oligarch at the moment, that's not the perfect credential at this time, where there's so much talk of Russian, meddling with Western elections and of Russian trolls and stuff like that. So this is really the crucial question that has to be cleared, and the European Central Bank has to do all it can to clear things up.
Well, I guess, Conrad, you will definitely monitor that ECB meeting and perhaps give us an update on that tomorrow when we talk. However, there are quite a number of earnings that came in today and late yesterday, one of them being Deutsche Boerse's 2017 earnings. What are the key details or takeaway from that report released last night?
Well, the earnings numbers for 2017, profits and revenue, came in slightly weaker than what Deutsche Börse itself had forecast at the beginning of the last year, and they were also slightly weaker than what analysts had expected for today. Still, the share price of Deutsche Börse is nicely higher, and it's been gaining since the beginning of the year. It didn't have to suffer from the downswing which happened for the broad market a couple of weeks ago. And that has to do with the outlook for Deutsche Börse. And today, Theodor Weimer, the new CEO of Deutsche Börse, gave out pretty ambitious profit targets and revenue targets for 2018. He also said that Deutsche Börse expects to profit from Brexit. With Brexit, a lot of the euro clearing business is expected to be transferred from London to the continent, and Frankfurt, of course, wants a share in that. Deutsche Börse also says that market volatility, something which has returned in recent weeks, is likely to stay, and that means that the market's operator will profit, because many investors will try to hedge their risk by buying derivatives, which increases the volumes on Deutsche Börse's derivatives platforms. And last but not least, Deutsche Börse says that it's trying to grow by mergers and acquisitions. M&A, that's another key word that Theodor Weimer used today. All this combined is a pretty upbeat and positive story today.